Discounts on Russian oil for Indian refineries have increased significantly. This shift may prompt India to resume large-scale purchases, despite existing agreements with the U.S. According to reports from Bloomberg, over the past 10 days, the discount on Russian Urals oil has exceeded $10 per barrel when compared to Brent. According to reports from Argus, the current discount is approximately $11 per barrel, whereas at the end of January it was just over $9 per barrel. Earlier, U.S. President Donald Trump officially announced a new trade agreement with New Delhi, stating that Washington would lower tariffs on Indian goods in exchange for India completely halting its imports of Russian oil. Indian Prime Minister Narendra Modi confirmed the agreement, but did not specify anything regarding oil. So, will India really stop buying Russian raw materials? What will this cost Russia? I'll ask Ivan Us, the chief consultant at the Center for Foreign Policy Studies of the National Institute for Strategic Studies. Mr. Ivan, hello, glad to see you.
Good afternoon, Miss Anna. Glad to see you too, and greetings to all the viewers.
Mr. Ivan, this is quite a complicated story. That's how it turned out. U.S. President Donald Trump claims that India is stopping its purchases of Russian oil. That was just a few days ago. But Bloomberg wrote that an Indian refinery turned to their government for clarification after this statement. The Kremlin also says they haven't heard anything, claiming that everything is still being sold. So what was that all about? Is it really possible that India might refuse to buy oil from the Russian Federation?
You know, Miss Anna, I like to joke that the easiest thing you can do in life is to quit smoking. You can do that 10 times a day. In the same way, India can say 10 times a day that it is stopping the purchase of Russian oil. But in reality, thank you, we see that oil is still being supplied. We see that, after all, oil is still being delivered. The only thing is, in this case, it seems to me that India is just negotiating for additional discounts. And by the way, they are getting results. Because already now, according to the Ukrainian Foreign Development Service, in January of this year, Russia received significantly less revenue from oil exports compared to January of last year. Although, in principle, I do not rule out that the physical volumes, the oil that Russia supplies, has actually changed significantly. Why is this happening? Well, it is because, in actual fact, Russia is now being forced to offer significant discounts just to maintain its current positions on the competitive international markets. And when you offer these steep discounts, that is to say, when you lower the market price of your own product, to some extent you really have to carefully consider exactly what you are spending to extract, in this specific case, that very same oil. And here, in my opinion, is the most unpleasant part of the story. For Russia, or rather, the story is that the production cost of Russian oil is estimated to be in the range of $45 to $50 per barrel. Meanwhile, let's put it this way. I haven't seen the specific data for January yet. But back in November, Russian oil was being exported at a price of $44 per barrel. And then in December, it dropped to $39 per barrel. And something tells me that in January, the price was hardly any higher than $39. So it actually turns out, thank you very much, Russia supposedly maintains its total physical volume of exports, but in terms of actual money received, it is getting significantly less. And as for the relationship between India and Russia, according to the latest data currently available in various open sources regarding Russia's international oil trade, despite the fact that Russia is actively trying to conceal it, no less than 51.7% of all Russian oil goes directly to China, and approximately 41.3% goes to India. So we understand that India is the second largest market after China because these two countries, in fact, are almost entirely supplied with Russian oil. There's also Turkey, which provides data. I think it's also involved. A bit less so in Europe, Hungary, and other countries because we know that supplies are still ongoing. And other countries like Brazil, it also buys some Russian oil, but not very much. But India, I repeat, is the second largest market. If India really stops buying Russian oil, this will lead to a situation where China, as the only remaining major buyer of Russian oil, will be able to dictate the terms. Either Russia sells oil to China on those terms, or it won't be able to sell to anyone at all.
That means there could be even bigger discounts because Bloomberg reports that right now Russian oil is sold to Indian companies at a discount of about $11. So according to your forecast, could there be an even bigger discount when selling oil?
By the way, please note, the $11 discount is not compared to Brent, it's a discount compared to the price of Urals. Because the Russian Urals crude oil is already being sold at a margin of approximately $9 compared to the main global oil benchmark, Brent. To put it in more general terms, they are already conceding $10, and then they decide to give an additional $10 price reduction on top of that. So that's already $20. Russia is dumping. And here, let me remind you that the Russian budget for the current year, it is based on the assumption that Russia will sell its oil at $50 per barrel. Right now, the price is 60, so that means minus 20. So Russia will be selling its oil at best for $40. Although, as we can clearly see, the market figures that were in December and basically in January, where I think something changed, the price there will likely be lower than $40 per barrel. Consequently, Russia will not just be missing out on revenue, it will be significantly under-receiving, especially considering the factor of this production cost, and I don't rule out that the discount game leads to the fact that Russia will start selling oil at a loss. And then not only will it not be making money from it, but on the contrary, it will actually be losing money.
For many months and now even years, we've been hearing that the Russian economy is about to collapse, but so far it is still holding on. The Washington Post even wrote that in 2026, the economy of the Russian Federation will break down, taking into account all these trends regarding oil, among other things. What is the current situation, and what did the first month of this year show regarding the Russian economy and the revenues to the Russian budget?
Well, Miss Anina, indeed, as our Foreign Intelligence Service said, revenues have significantly decreased. And regarding the Russian economy, there is some news on this note, or rather, I hope that tomorrow or next week there will already be data regarding inflation for January. Also, quite interestingly, in just the first 3 weeks of January this year, Russian inflation already amounted to 1.91%. Just in case you forgot, let me remind you that the officially expected annual inflation in Russia for the year 2020 is only 4%. And yet here we already have nearly 2% in just the very first of 12 months. So it turns out that if the inflation rate from January continues, though I understand it won't, because in Russia there was an increase in taxes and fees starting January 1st. But it's quite possible, considering the need for money, that the next increase will happen, let's say, on April 1st, at the start of the second quarter. Then it's unlikely that the rate will decrease significantly. And it turns out that in the first half of the year, Russia will already blow through, as they say, its inflation plan. And this doesn't mean that there won't be any inflation in the second half. So indeed, there is a very interesting economic indicator of the state of the Russian economy that people in Moscow are monitoring closely. Restaurants are now beginning to close down at an alarmingly rapid pace. And this is precisely a signal that businesses are winding down their operations. Everyone understands that there are no real prospects to be seen in the Russian economy. And if businesses are closing, then accordingly, non-oil and gas revenues will also decrease significantly in parallel with oil and gas revenues. That is, soon, most likely, this issue, which in Russia is still being discussed cautiously, that pensions shouldn't be paid, will no longer be talked about cautiously. It will be discussed in the State Duma, and not just in debates, but when making the relevant decisions.
Mr. Ivan, what role do interest rates play in this process in Russia? And do you think there could be any significant changes soon?
Look, Ms. Anon, on February 13th, there is supposed to be a meeting of the Central Bank of Russia regarding the key, as they call it, interest rates. And previously it was generally assumed that they would lower it. But why do people say that the inflation data for January should come out before February 13th? Because it is precisely based on these figures that the Central Bank of Russia, the central bank's management, not just Nabiullina, but the entire board, will make a decision about what the interest rate should be. If earlier they said the rate would be lowered by 0.5%, the latest I've heard is that it won't happen. Let me remind you once again, the current key interest rate in Russia is sitting at 16.5%. So it turns out there will be no further rate cuts for the time being, and this also has a very negative impact on Russian businesses across the board. Because if you listen to the Russian people, not even just the experts, but the actual entrepreneurs who express this at various economic forums. Regarding the current situation, they say there are two major problems right now. The first is the strong ruble, 76 rubles to the dollar. Let me remind you that just a year ago it was 100 rubles to the dollar and now it's 76. So it turns out the ruble has strengthened, but because of the strong ruble, engaging in export activities is becoming unprofitable. Because if you sold something for $1 million, before you would get 100 million rubles, but now you get 76 million rubles. So you lose 25 million rubles, while your internal transactions are in rubles. And that's why I have to say the situation isn't very And the second problem is precisely the key interest rate. What's going on with this rate is that due to the strong ruble and the high interest rate, which according to, let's say, Shokin, the head of the Council of Industrial Enterprises, should not exceed 7%, and according to Hermann Greff, the head of Sberbank, should not exceed 12%, we see that ours is even higher, which doesn't allow businesses to develop. What this means is that investments are at zero. Continuing to engage in their activities isn't very appealing either.
Mr. Ivan, we have one more minute of airtime left. We started our conversation with oil, and I'd like to ask you about the domestic market, the Russian one. The Foreign Intelligence Service of Ukraine recently stated that gasoline prices on Russia's domestic market have risen again. And now the price is 8% higher than in the United States. What does this indicate?
As you can clearly see, when Russia faces its long-standing and traditional budgetary challenges, especially since the beginning of the large-scale war, the Russian government starts thinking about where they might cut their costs, and one of the primary areas where they will definitely look to save money is the Demfar. This is essentially a bonus that is paid out to oil and gas workers as compensation for selling their products at lower prices on the domestic market. And this is in comparison to external prices. Now, on the contrary, they don't just want to remove this bonus, but are hinting, what if we do? Representatives of oil companies will have to pay into the Russian budget because the subsidies have dropped. But they say we are not going to pay. And since they fear they will be forced to pay, what do? They raise prices, and in this way they want to recoup that money. Here you go, these are the consequences of the economic policy that Russia is currently pursuing.
Mr. Ivan, thank you very much, as always, for an interesting conversation and for your time. As a reminder, we were joined by Ivan Us, Chief Consultant at Foreign Policy Studies of the National Institute of Strategic Studies. Thanks.
Washington has played its nuclear card in the economy. Right now, the White House is preparing a strike that will finally bury Russian exports. Putin has been given an ultimatum: either make immediate concessions at the negotiations, or Russia will lose its entire shadow fleet of tankers. This is not just sanctions, this is a complete maritime blockade. How will the Kremlin respond to the threat of losing its petrodollars? Now you'll learn the details of a plan that could wipe out Russia's entire budget. For more details, check out our report. You're watching the Glavred channel, and I'm your host, Evgeny Serov. Please remember to like this video and subscribe. According to official sources in Washington, Glavred reports that the largest sanctions package in history is being prepared. The main target is the shadow fleet that Putin has spent years assembling around the world to circumvent the oil embargo. The U.S. is no longer going to play cat and mouse with individual ships. According to insiders, the Trump administration is considering a scenario of total blockade. Every tanker caught transporting Russian oil above the price cap will be denied access to any international port, and their insurance will be cancelled at the snap of a finger. In effect, Putin has been threatened with the loss of all the tankers that are currently working hard to keep the Russian economy afloat. If this mechanism is launched, hundreds of ships will be turned into rusting scrap metal, unable to even enter neutral waters without the risk of being seized. Why does Washington need this escalation? The answer is simple. The negotiations in Abu Dhabi have reached a dead end. Putin is trying to bargain by leveraging the situation at the front, but Trump has decided to strike where it hurts most, at the wallet. The threat to destroy the shadow fleet is a direct message to the Kremlin. You have 1 week to become willing to negotiate. The United States is making it clear that they know every ship's specific serial number and every various shell company in the Emirates or Hong Kong through which the trade is conducted. Experts note that this is the final Chinese warning. Without the ability to export oil by sea, Russia's exports will drop by 70 to 80%. The Russian budget simply won't withstand such a collapse for more than 2 months. Trump is giving Putin a choice, either peace on the West's terms or economic suicide. How can the U.S. technically pull this off? The United States government currently plans to use sophisticated real-time satellite monitoring. Any attempt to transfer oil from ship to ship in the open sea will be immediately identified and tracked. Moreover, the U.S. is pressuring Greece, Turkey and Southeast Asian countries to close their straits to suspicious tankers flying the flags of Panama or Liberia. If a tanker doesn't have transparent Western insurance, it's considered illegal. Putin was told directly, your ghost ships are no longer invisible. This is checkmate for Russia's maritime logistics. The oil will simply get stuck in pipelines and storage facilities, which are already overflowing. This will create a technological disaster at the oil fields themselves, where production will have to be stopped permanently. And what do you think? Do you believe the United States would dare to impose such a total blockade without being concerned about a significant spike in gasoline prices back at home? Share your opinion in the comments. This is definitely going to be a very heated discussion. Please remember to like the video, subscribe to the channel, and don't miss our next important emergency broadcast. We will see you all again very soon.